U.S. economic outlook for 2025. The economic outlook for the United States in 2025 presents both challenges and opportunities. As the country continues to recover from the impacts of the COVID-19 pandemic, economic growth is expected to slow down slightly but remain resilient. Key factors influencing the U.S. economy in 2025 include inflation rates, government policies, consumer spending, and global economic conditions. Number 1. Economic growth in 2025. The U.S. economy is projected to grow at a moderate pace in 2025, with growth rates expected to hover around 2% to 3%. While this is lower than the rapid recovery experienced in previous years, it indicates a stable economic environment. The U.S. economy is shifting from rapid expansion to a steady, sustainable growth, driven by consumption, investments, and government spending. Number 2. Inflation and price stability. Inflation has been a key concern in recent years, but in 2025, it is expected to moderate. The Federal Reserve's monetary policies, including interest rate hikes, are aimed at curbing inflation, and it is anticipated that inflation will return to a more manageable level of around 2 to 3% by 2025. Price stability will help maintain purchasing power for consumers and reduce the uncertainty in the economy. Number 3. Unemployment rates. Unemployment is expected to remain low in 2025, though it may slightly increase as the economy adjusts to a more stable growth trajectory. The labor market is expected to be tight, with demand for workers continuing in sectors such as technology, healthcare, and green energy. However, there will still be challenges in addressing workforce shortages and improving labor force participation rates, especially among certain demographics. Number 4. Consumer spending. Consumer spending will remain a key driver of U.S. economic growth in 2025, with a steady job market and moderate wage growth. Households are expected to continue spending on goods and services. However, higher interest rates may make borrowing more expensive, potentially slowing down consumer spending on big-ticket items like homes and cars. Despite these factors, consumer confidence is expected to stay strong, supporting ongoing economic activity. Number 5. Technological innovation and investment. In 2025, the U.S. economy will continue to be influenced by advancements in technology. Investment in sectors such as artificial intelligence, green energy, and biotechnology is expected to rise. This innovation will drive productivity gains and create new job opportunities. The government's focus on fostering technological growth, particularly in clean energy and infrastructure development, will be crucial for long-term economic stability. Number 6. Global trade and economic relations. The U.S. will continue to play a significant role in global trade, but geopolitical tensions and trade agreements will shape the economic landscape. Issues such as tariffs, supply chain distributions, and international relations with China and Europe will impact the U.S. economy. Despite these challenges, the U.S. is expected to maintain strong economic ties with its trading partners, although it may need to adapt to shifting global economic conditions. Number 7. Public debt and fiscal policy. Public debt will remain a significant issue for the U.S. in 2025. The government's fiscal policy will likely focus on managing debt levels while supporting economic growth through infrastructure spending and social programs. Balancing the budget while addressing public debt will be a key challenge for lawmakers. However, economic growth is expected to help manage debt sustainability, preventing a crisis in the short term. Number 8. Housing Market Outlook. The housing market in the US is expected to cool slightly in 2025 after a period of rapid price increases. With rising interest rates, mortgage affordability will be a concern, potentially reducing demand for new homes. However, housing markets in certain regions, particularly in tech hubs and major cities, may continue to experience a strong demand due to limited supply and population growth. Number 9. Sustainability and green economy. As the US moves toward greater environmental sustainability, the green economy is expected to grow in 2025. Government incentives for renewable energy, electric vehicles, and green technologies will support this transition. Investments in clean energy infrastructure and sustainability initiatives will create new job opportunities and contribute to long-term economic stability. Number 10. Conclusion. Overall, the US economy in 2025 is expected to face a more stable, moderate growth path, with inflation under control and unemployment remaining low. However, challenges such as geopolitical tensions, public debt, and technological disruption will continue to influence the economic landscape, with a focus on innovation, sustainable growth, and a stronger consumer spending. The US economy is poised to continue its recovery while navigating the complexities of a rapidly changing global environment.